Welcome to the Twomey Stock Market Report. I'm James Twomey, and today is Tuesday, August 25th, 2022. So this is a subscriber's video, and want to get this out in short order tonight. Probably spend about 10 or 15 minutes here on what's developing. We did get a lot of alerts out the last couple of days. The market is starting to make a major change. How it develops from here is going to be very important. We've got a couple of things that we've got to alert you the next day or two. We took some long positions today, brand new ones. We got out most of our short positions, except for our shorting of bonds, if you will. And we have many positions that if you took them today or tomorrow, we need to get the stops out there so that you'll know where to put your stops in. We may run into some of the things we ran into last week with the Dow is interesting, leading the charge here. The Dow came out first with a buy signal. Now all the other indices have followed suit today. We got buy signals, and usually when they all come out together pretty much within 24 hours and indicating a buy signal, that tends to mean a very, or potentially a very strong upward or downward bias, okay, when they're all in the same camp. The Russell 2000, the SPY, the Dow, and of course the NASDAQ. So we got out of most of the short positions. Hopefully you got all those sell signals and you've locked in some gains. The last one we gained 10% on the PSQ, the NASDAQ. We did very well with those shorts since August. Nice way to end out the summer, if you will. We got buy signals out on some long positions. We had some last week to help us in the Dow, that's moved up, and we're going to go over that real quick here. And tech earnings came out. We had Microsoft, Spotify, Google, and another big one. It'll come to me, and it was all negative, right? They didn't ad revenues down. So with Microsoft licensing, they're getting hurt by the dollar exchange over in Europe and all that, but they're still doing pretty well. Anyways, all those stocks ran up the last couple of days, and now after hours they're down 4, 5, 6, 7%. Spotify is down 7% after hours. So tomorrow we may see some softening there, and that's the deal. Will the market react and say, okay, we expected these high tech stocks to really just, not deliver the great gains and add subscribers and ads and all that stuff going forward, but we expected that, and they didn't do so bad. And that's what happened with the Dow. Even though a lot of those companies had modified their earnings and their sales and everything else, and they came in and around that or met those expectations, they got rewarded with saying, hey, these companies are navigating this downtrend, a recession, whatever you want to call it, in fairly orderly fashion. There's no secret. Employment is still high. With that really softens a lot of what's going on in the high inflationary sector. We've gone over that ad nauseum, but also too, we're starting to hear more and more layoffs. Microsoft actually announced another layoff, so we'll see. There's a lot to come. You're going to have to be aware of. Keep your eyes out for some alerts, and we'll keep you posted. This will be a little rocky the next couple of days, but overall, we go to our charts, there's a couple things developing. Now this is the diamonds, or which we use the diamonds ETF, which is mimic the Dow Jones, right? We don't trade this one. We have our other ETF that mimics that. It's a lower cost price per share entry, and it makes it a lot easier to manage. But we talked about this, the fast stochastics. They've the last 10 days, they've really run up. They're in high positive territory, in the high 90s. Green still retained above the red. That's our fast oscillator that says, hey guys, be aware, we've got upward pressure. And then once the MACD, the green, crosses above the red, it's behind the volume lines here. You can barely see it. And now the MACD is actually, the green's in 1.4 positive territory, so it's over zero. That is more the longer oscillator, and once that gets up into the green, crosses the red, that says, hey guys, we're taking this up price moving seriously. We got our buy signal we went in with last week. We got stopped out. The very next day we had a tight stop. That's one of the reasons why I didn't give out stops today. And then we had to get back in, the day or two later from that, and we've enjoyed that run up. But if we look technically here. I mean, fundamentally, the companies did pretty good. These Dow companies and their earnings and expectations they met. They still say they got forward headwinds, but that they're facing, but that's expected, right? Especially with the dynamics, what's going on out there. But we've got the prices well above the 9 EMA. That's the black line here, right? It's well above the 14. That's the orange line or gold. And interestingly enough, look at this, the pink line, the future. It's 50-day moving average. It's well above that, and it's getting near the 200-day. Well, the 50, it kind of bounced here the last several days. Once it crashed through it, never looked back. Fibonacci, I'm not a Fibonacci. Some people use this and solely use this. I use it as really a backup, but that's well over 50% from the high retrace. So what does that mean? It went high to low, and now we're back up 50% from the recent low to the high in a ratio. Anytime it gets into the 50 or above, it's almost up to 0.618 or 61.8%. Once it gets over 50 and heading towards 60, that's telling you it's a stronger bounce. Stronger bounce means there's more upward movement in this case because it graphs up versus downward. That means price pressure is upward, and it's much more likely to sustain and probably get closer to a 1-to-1, and that 1-to-1 would be the highs that we hit in the summers, right? The summer bear market rally. Well, we've taken about half of that already back, and the market pundits are just starting to say, hey, well, maybe this is a tradable rally. We're going to see. We're not in the prediction business right now. Fundamentally and technically, is working in our favor. So now I want to take, we got the other sectors went in, and let's look at the Nasdaq. We sent out an alert today for to get in an ETF that mimics the Nasdaq in the technology sector, and lo and behold, if we look this and kind of similar, right? It got up above our 9 and 14 EMA. The stochastics are way up in the 90s. That's it. Said, hey guys, I'm already out of the barn. The horse is running, and the MACD is not in positive territory, but the green went above the red, and it's saying, I'm thinking about it. We're taking a small position. Well, we took our position. We're in, and we'll see where this earnings season takes us because the advent of the bad news on the tech, which was not a surprise. So I don't know how the market's going to respond to that. We have to look at it. But see the 50 EMA. Now, we'll go back to the Dow, but we saw how this, in the Dow, let's go right back to it, the diamonds. We took a couple of days and that was the tricky business after the buy and sell signal that we got. And it kind of repelled here, right, for 2 or 3 days, and then it broke through. Will the Nasdaq follow suit? If it does, look out, because if it can get above that, it may not make it tomorrow, but if it can get up there and hold, the 50 is a very important line technically out there. A lot of I shouldn't say this as gospel, but it is used by many traders, many institutions, especially from the technical side. If fundamentals look good and 50 EMA acts as support, it's a very positive buy signal, and it will drive the market up. Okay, so we got some potential there. Let's see if I can draw a quick Fibonacci here from the summer highs, and this is it's about at 0.38, and if it gets repelled here, it would be a no surprise, because that typically is a place where traders will say, we've got the first initial bounce. 0.38 is a Fibonacci bellwether number, and it's stopped right there, and it stopped at the 50. So people might take profits if they got in here at the bottom, right? So we're gonna watch that closely. Be alert. Be alert. We also want to talk a little bit about energy. Energy is a whole different dynamic. We're having some interesting stories. Let's talk about. We're going to go to USO first. All right, USO is the United States basically barrel of oil price, and very volatile, speculative market. We did get the buy signal if you remember, I said, oh, I'm not going to issue an alert to buy it because I'm not sold on it. We put it in our market letter. We've been kind of following it. And sure enough, it bounced back, and now it's hit a kind of a sideways move. It's stuck at the 200 EMA and the 50 EMA all bunched together. So we're going to watch this. But typically, we heard a couple of things. Strategic reserves, they put out the last 15 million barrels, was it, of that 180 million that they had earmarked to keep prices low here. So that's out. The government has come in and put a ceiling on pricing and said they're going to start refilling these strategic reserves when prices get between, I don't know, was it 67 and 70, whatever it was. So now that's they're guaranteeing that price. So it's putting a floor on oil at that price. I don't know. You wonder sometimes. Anyways, U.S. oil, the diesel fuel supposedly is only 25 days available based on refineries changing over, et cetera, and availability and strategic reserve downplay. We'll see what happens. The heating season is kicking off. It's a speculative market. It's already looking well past into the early, quarter, 3 to 6 months out. It's trading as if there's going to be less oil usage, even though we're hearing some, shortages on the horizon. So we're going to keep an eye on that. We look at XLE, which is our ETF, which is both services as well as utilities, natural gas, and not utilities, natural gas and oil, and companies like Schlumberger are in there, Exxon, Chevron, etc. This is telling us that, notice this, the Twomey trend track lines is narrowing up top here. That means in order for these to narrow, the type range is getting tighter. And that means it's probably flattening out, right? In order for this top line starts coming down, this starts going up, that we're getting into an apex that may be flattening out. Stochastics, very strong, 94. Short-term oscillator saying, hey guys, don't worry, we're long and we're going well. MACD is still positive and it's very healthy. It's saying, hey, I'm on board too. Price is up there. It's well above the 9, well above the 14, well above the 50. So there is some room for pullback. The RSI is pretty healthy here at 67. So it's definitely anything over 70 is considered overbought. When I see 65, I start paying real attention that we might have a pullback. I think we sent out some alerts on tighter stops on some of these energy plays today as well, because we've got other energy. So that's interesting. So we're going to see if energy starts coming back down. There's a couple of reasons for that, and I'm going to jump back and forth here, but I use UUP for the dollar, right? I just sold this today. We did not have a buy signal alert to our alert subscribers, and there's a lot of reasons for that. I don't typically trade currencies with subscribers. There's a lot of reasons for that. We'll go over it when the market settles down. We can talk more about currency. But anyways, we got the sell signal. We got out of that today. And if the dollar does pull back, it's been in a parabolic move. If it does pull back, it's going to ease prices over in Europe. It's going to help them with the differential of money that they trade, and they turn everything into dollars over there, and then they have to pay if the dollar goes up in value, their currency goes down in value, and they have to pay more of their currency because they're to cover that dollar investment. It gets kind of confusing, but that will help them. That will help the issues that Europe's facing. It also will help the Fed in their fight on inflation. But a strong dollar, what does a strong dollar mean for the U.S.? You can buy more, right? You go up to Canada, dollars is worth, $1.35 of Canadian money. I don't know what it is now, but I can remember, younger days we'd go up there and feel like we're flush with money. So if your dollar's stronger, you can buy more overseas, right? It looks and it helps us in deficit spending and everything else. If the dollar comes down, those overseas products your dollar won't go as far. So we've got a couple of things happening. If the dollar continues to come down, we expect materials to start pulling up. We've been in materials in and out. We totally get disappointed. We expect, and we're coming back to the oils and the natural gas. We would expect that to have some buoyancy. And if the Fed can relax a little bit, the economy will move towards saying, hey, a soft landing, economy, unemployment is still low. We might start feeling the economy is not going to slow as dramatically as everybody's saying. And that means consumption is going to continue. Oil and gas is going to be needed. People are going to feel a little relief on the inflation sector, and maybe prices will all come down and people have money to spend. I don't know. I mean, depends what day you tune into the pundits, but we're hearing anywhere from major recession to no recession to soft landing to the Fed's move too fast. I'll tell you this, and you can bank on this one. The Fed's going to go up 0.75 most likely in November. I'm not in a prediction business, but they're saying it's, and all the statistics look like that's a go. December, they're still targeting 0.5, but the pressure to go to 4.5% is a little bit less. But a lot of people predicting the first quarter, they may stop and abate their rate increases. And, let's face it, the Fed will be at 4.5 to 5%. They want inflation down to 2%. We're at 8. Even if it comes down to 6, they're not going to be happy until it at least hits 4, right? So I don't know. I'm not in a prediction business. I think it's got a tough sell unless something catastrophic happens. I don't see us being below 4% inflation in January, but hey, we'll see. We'll see. Certainly not going to be at 2%. So the Fed may not ease up as what everybody's thinking. But if the Fed after December says, hey, we're going to pause, and it's after the midterms, we could see the first few months of 2023 to really be a real boost in the market to take off and run. So we've got a lot developing. We want to stay close to that. I want to look at UNG, and that's the natural gas. We've been in and out of this. We've had some tremendous profits, but it's a fast mover, very volatile. We don't mess around with it. We have tight stops, but it's starting to bounce off the bottom here. It's up at the point. Did it make? No, it didn't even make 0.23 on the Fibonacci. So it didn't even get to a 23% retrace. Stochastics are saying, hey, pay attention, guys. I'm moving forward, upward slope. It's only 11. We're not into the 75 area, which we get excited about. MACD is still negative and low. We're being repelled here at the 9 EMA, always have been for since September anyways. And, we're right up at it here now. So we don't see it as a buy, but it is heating season. Natural gas, normally I would look at this and I would look at a shorter time frame, and knowing how fast this moves, we got a buy signal in the 120 minutes, so that you break the day into 4 segments of 120 minutes versus a 1-day bar. And I look for on this, if we get buying and then we get a little bit of selling, does the selling come back to where it was, or do we start racing off and getting some more growth in price? And sure enough, here, came down, it hits the bottom, it bounces up a little bit, but then comes back down again. And that did that for, months. Now we're starting a trend where it goes up. Yeah, it pulls back a little bit, but it bounces up and above where it was last time. We also got a buy signal there. We got the MACD and stochastic. Everything is pointing towards the buy. Normally I would say, hey, let's go on our mouse hunt. What's our mouse hunt? We go out looking for big game that we want to, bag that big animal, and we come back with nothing but a mouse, because often it disappoints us. I didn't do it on this one, and here's the reason why. You look at the fundamentals about LNG, natural gas. It should be going up, but Texas now is saying they're awash in natural gas. Too bad we can't get it up here in the Northeast where I am, but there was some trading going on. It's all in speculation and commodities and futures, and when people say, hey, I buy something in the future market, when it comes time to the bills due, there was a negative cost in there for somebody. So meaning the price came down below 0, which is amazing. Also, Europe, short on natural gas. They did fill up their stockpiles. They now have all these ships trying to either unload or waiting to unload. There's no place to to put it, because they're short on LNG storage. Remember, they got 40 some odd, 50% of their natural gas on those pipelines. That's a spigot. Now they have to put it in, liquid natural gas container fields. They didn't really have a lot of them over there. So they're all full. That should give them a good, 3 to 6 weeks, 6 to 8 weeks run. But these ships are offshore, and if they're full, they go, hey, yeah, you're over there at $10. We're kind of full. I don't really need you, but if you want to give it to me for $8, I'll take it. I'll find room. That's what's happened. So, and then on the other side, these ships and the distributors, they say, whoa, it's going to get cold. I'm going to just sit here in the harbor or out in the ocean here. I'll wait till you really need it. You deplete your reserves. And yeah, that $8 you talk about, no, it's going to be more like, not 9, it's going to be 12 or 15, right? So it's a commodity, it's speculative, it's traded by some very huge money. But with that said, we're going to keep an eye on it. If it starts to take off, we may issue a buy signal, and that's one that moves really fast, but we have to be careful. So we've got some developments, negative and positive, that's going on out there. I don't know how that's all going to play out. We've got our buy and sell signals. We got out of all our short position except for the bonds. Let's go over the TBT on the bonds here. We certainly, again, saw that move way up. It's pulled back. We moved up our stops. We were up 55% gain on one of our positions there. We don't buy at the bottom. We don't sell at the top. We may get stopped out there and get 45, 48% gain. So be it. We'll still have the second third and the final third if we get the sell signal. And if we do, we'll get out and we'll preserve those profits. So we've made some good inroads here. It's been one of those markets where I don't have the screen, so you're gonna have to bear with me on this real quick. With a little bit of background. Let's stop it right. As you know, in some of our positions, TBT was 57% as of last newsletter, August 3rd, that we bought. Terrific gains. If we end up getting shaken out on that, in the high 40s, so be it. Not a bad deal since 7 or 8 week play. We'll take that. We got out of our last of our shorts, and the last one was the PSQ, the short of the NASDAQ. That last position yielded us 10, and we had sold thirds and thirds for some positive gains before that since our August position. So the Russell 2000, the short of the SPY SH, and the short of the Dow with dog, we all worked out in our positive favor. And, we'll definitely happy to book anywhere from those 3 to 10, 12%. Since the last 6-7 weeks, we'll take that and run it every day. PAA, we got in that. We've been in and out of a couple of times. We've gotten some part of our position stopped out. We've added to that. I mean, this thing's is around an 8 to a 10, depending on the price. It's 8 to 10% yield. The price doesn't fluctuate much for the last 2 years, between 8.5 and 11, 12, 13 at the tops. But so, it's got a nice basis there. If you can get in around 9 or 10, and you get 10%, you get a cushion of $1 up and $1 down. Not too bad. It stays right in that bandwidth of PAA. One of these days we can go over the stock again. We've done it a couple of times. But it's given us an 8, 9, 10% yield on the position that we get, during the year. If you hold it all year, we've had a 12 and 11%, and I think a 7% gain that we took in short order. This one, we're up 13%. I mean, where else can you get a stock that's going to give you 20, 30% throughout the year? If it, the rest of the year has to play out. But if we get our dividend, we're going to get 7, 8, 9, 10%. If we've made a couple of positions where we made 10, 12, 13% along the way, that's a pretty good use of your money. And I don't see you getting that anywhere else right now. Not you, the collective you, right? XLE, 7%. We've got some other energy and Dow component plays that we got into last week. They're up 5, 3%, 4%. So we're in good shape there. We want to continue that. And what we'll do is we'll send this out, take a look at it, get a little feel of where the market's going technically and fundamentally. We talked briefly what's happening. Next couple of days, we're going to walk that wall of worry. We may have to adjust stops. I know we don't have any in place on some, so I got to get that out tomorrow. And then we're going to take a look-see on where the market moves and how fundamentally everybody reacts to some of these tech earnings that are coming out the rest of this week here. I think Amazon comes out Thursday. So we had some good news in Chipotle, Ford, and a few others, Coca-Cola. So they're all showing some good activity and things moving. They've been able to pass prices along to the consumer, and they don't get affected as much as by the international sales like Microsoft with licenses overseas and the dollar discrepancy and all that. So that's telling us, these things that people will go out and buy a Diet Coke. They may not buy that, cocktail at dinner, but they'll maybe get a soda, right? Or they may, take a soda at lunch versus, these high-end drinks from one of the coffee chains, right? So we'll see. I think things are going to develop, and we're going to have a good indication next couple of days. If this rally gets sustained with the holidays coming up, midterms, we could really see this rally take off. If not, we're back in the downtrend, and we'll be back in the short market. So get on to TwomeyStocks.com, the number 2MEstocks.com. If you haven't signed up for those alerts, make sure you do so you can get your email updates as they come through and be the first to hear. And I'm James Twomey. Enjoy the week, and we will update you as needed. Thanks for listening, and thank you for joining.